good morning or afternoon to all my subscribers and those who have tuned in. In this second video, I'll be talking about how my investment philosophy has evolved over the years since I first started investing almost 2 decades ago. At first, I was a pure speculator, seeking excitement and the adrenaline rush from participating in the market's ups and downs, and reveling in fast money and quick overnight profits. However, I found that this strategy always ended up in the speculator losing all of his earlier profits and then some. So over the years, I've learned to become a mixture of a long-term buy and hold type investor as well as a speculator, so what they call a specuvestor. I still believe that all of us are traders technically, because no matter whether we are long-term or short-term in outlook, we have to buy at some time and sell the position eventually, unless we intend to leave it to our children and grandchildren. So I believe in the principles of a successful trader, and 3 of which I will mention now. One of them is to learn how to cut loss. Now, I'm struggling myself with this principle because it's never easy from a human perspective to take a loss. But if the reason that you used to enter long in the position is no longer valid, you should try to exit with as minimal of fuss as possible to prevent further paper losses. The second one that I believe in is called following the trend. So now I believe that the mid-term to short-term outlook is bullish, so I will try to ride the trend as far as possible. Of course, hedging does play a role, but I generally do not hedge because I take relatively small positions relative to my assets. The third principle that I'll talk about is not from the Trader's Handbook. It is my own belief, and I'm sure some others share this belief, that one must respect their own money. What I mean is that I should not place my money in rubbish stocks or those of companies with very dodgy backgrounds, like penny stocks and such, because they can only bring tears and despair eventually. You may derive excitement from big profits going up and down, but eventually you will lose to such companies. So one should respect their money by placing them with fundamentally sound companies or stocks of them. So one condition for that is that the company must not be losing money. That is a baseline for me this year. And this is a recent development, because even until 2 years ago, I used to just load my portfolio with all sorts of trash, hoping for big outsized gains when the stock was pushed up by speculators. So I try not to do that now, and in fact last year a large part of my income from stocks was due to dividends paid by the fundamentally sound companies that I invested in. So I'm quite happy with that, and this is what I learned after going through years of pain as well as heartache in investments. I understand the great excitement that pure traders derive from entering and exiting the market, going long and going short, and making a ton of money in short order. But for me, those kinds of excitement can cause a heart attack. Even though I'm not that old, but my heart can't bear those kinds of excitement, having sleepless nights and such. So my ideal investment scenario is to enter a stock which is bottoming out and has a favorable technical picture, and just holding it for the long term, but not as long as Warren Buffett, but maybe 1 year to perhaps 5 years. But even holding a stock for a year is considered long for someone with a temperament like mine. So the point is you have to choose your own style that suits your own temperament. So I, for one, cannot be a participant in the futures markets because they are just too nerve jangling for me. So I will just stick to the stock markets, and I wouldn't go short as well, because again the upside is unlimited in most markets. So I don't think I can survive the excitement, negative or positive, from such incidents. Finally, I'd like to update you on how my long positions in the stock market entered to on January the 9th have done so far.